Welcome to another weekly Forex forecast, traders. As always, we will start with the US dollar, the DXY index. I've been talking about this weekly area of demand for quite a while now. This demand zone is from quite a ways back. And if you look, this area of weekly demand is actually inside of this overall monthly demand. And we were expecting a pullback down to this weekly demand that's embedded inside of the monthly area demand. So now with this weekly demand and control, you can see we are getting some sort of reaction to the upside. I'm definitely not saying, wow, this demand is holding. Wow, it's definitely holding. Wow, amazing. I am not saying that at all, but we have a weekly demand and control. So we actually could expect the dollar to get strong. I am not saying we are going to get a pullback all the way up to 103.06, but I am saying we definitely could see some strength, and we are seeing some strength right now. However, I don't really think we are going to be extremely bullish until we can remove this daily downward trend, right? Obviously, for a weekly demand zone to hold, we need to see a break of this daily downward trend. So until we can get a break of this daily downward trend, I'm going to remain bullish on the dollar, but not, hyper bullish, right? We're still going to take dollar shorts, counter trend. It just might be a time to, since we are at higher time frame demand on the dollar, if you are going to short any dollar pairs, it might be best to be aggressive with profit taking. Now, since we've come off of that weekly area of demand, we've had some pretty significant price action. We did have an upward trend line there. That trend line was removed by the supply, but that supply was removed by this demand, and now we are reacting off of this demand. Not only that, we have a beautiful upward trend line on the 1 hour chart, and it's been respecting pretty great so far. So there's no fresh demand zones here because everything is tested, but what we're going to be monitoring is this upward trend line on the 1 hour chart. As long as this trend line's holding, we can expect price to continue to go up, obviously, and you could be looking for longs on the 5-minute chart on the dollar pairs. Now, even if we break the trend line, we need to break through this demand zone first, and even this demand zone to really signal, hey, maybe this is just a fake out and we're actually going to continue down and the weekly demand is going to break. So we want to be eyeing out both of these demand zones to see if they break, to see where price is going to be headed. Now, on the 4-hour time frame, we have a new 4-hour demand zone down below at 96.82. It is fresh. We almost hit it, but we did not. This demand zone removed a proven area of supply on the 4-hour time frame. So I think it is possible we even retrace down to this 4-hour demand and even get a pullback up to the 4-hour supply, up to 97.97. So at the end of the day, to summarize again on the dollar, yes, the trends are weak. Weak as in, we're trending down. I agree. The dollar has been looking weak lately. However, when we have a weekly demand and control, we have to, remain bullish. Even back here, we had this initial weekly demand, and you can go back and watch my forecast from back in May. I was pointing out this weekly demand, and sure, did it break? Yes, it did. But look at the move we got. We got the move from here to here. That's a big move. That's 1, 2, 3, 4 weeks of consecutive bullishness on the dollar, and I think that's what we could get now. So if history repeats itself, we are going to be seeing a move up in the US dollar. Alrighty, on to the forecast for the Euro US dollar. I mean, all signs are pointing to the upside here. Beautiful weekly trend to the upside. But remember, like I said, the DXY, we have that demand and control. So if we are expecting dollar strength, we could see Euro weakness. Obviously, it is the opposite, which could mean we will get a retracement bound down to weekly demand down at 1.09. I would love that. I would love to trade short the Euro all the way down to this weekly demand and then get that great swing trading dip buying opportunity. So with that weekly and monthly demand coming in control in the dollar, we definitely could see this thing start to turn around and contact that weekly area of demand. Now on the daily chart, we do have some sort of daily supply that's coming into effect now. This is very old supply from all the way back in 2021, so not really, my concern. But look at this daily trend, right? It is looking really strong. It is definitely something we want to monitor. Even if we break this supply above, if there's a daily demand zone here and the dollar continues to drop and we don't, get that confirmation like we're looking for in the dollar, then we could be looking for longs on the euro here. But like I said, we got to be cautious because of that US dollar chart, right? With the weekly demand and control, we could expect dollar strength, so we got to be very careful. But that didn't stop us from getting a euro long trade here. You can see this euro USD trade, beautiful setup so far. Profit's still running. I mean, we could easily target the high here, but this is a trade that we caught from the daily market breakdown video. As you can see, a screenshot from that daily market breakdown video today. And one of the members, Rohit, caught a beautiful 3-to-1 in just a couple minutes off of this trade. He posted that in the Discord group. So I'm glad to see the Discord members getting involved in some of these trades as well. If you want to trade alongside myself and the community, join the Diamond membership for exclusive access to our daily market breakdown videos and catch trades like these. Plus, dive deep with our full-length forecast covering 26 plus markets, our interactive Sunday Zoom sessions, and personal homework to sharpen your strategy. And you'll also join our private Discord group for direct access to me and unlock a complete library of A to Z video lessons to master supply and demand trading. Don't miss out. Let's level up your trading. Links in the description down below. So on the Euro US dollar now on the 4-hour chart, this demand's already been tested. That's why I point out the trades in the daily market breakdown videos throughout the week. Now that trade's already worked out. You technically could still be looking for longs on a 15-minute chart based off of this 4-hour chart. Even if we get a pullback, that's fine. We have demand zone down below here. Now, I'm not saying we're going to get massive moves off the zones. These zones might only be good for 2-to-1, 3-to-1 move like that, but there's money to be made on the way up. This is the best zone I've seen down at 114 rather than this one. So look, this zone's already traded here. We already got the trade off that zone. We have 2 fresh zones down below. In the meantime, you could be day trading long, but we got to be cautious, guys, because remember, the dollar demand is in control on the weekly chart, so we could see this thing start to sell off. And if we do, we definitely could hop on some shorts. I am just not really seeing anything at this time. So for now, we really just want to be buying those demand zones on the euro, but just looking to maybe get a quick take profit and be aggressive with our stop loss and profit taking. Alrighty, onto the forecast for gold. Looking at the weekly chart here, you're going to do a top-down approach. Weekly demand zone down below, weekly trend to the upside. All signs are really pointing to the upside. We had a very bearish weekly candles on the gold chart, but now we have a pretty strong week on gold. I still like to pull back down to that demand zone at 30.93. Even for investing in gold long term, I think it's pretty good. On the daily chart here, I talked about this last week. I don't trade chart patterns. I'm not very educated, so I am pretty ignorant on them. So maybe somebody can let me know in the comments down below. This is some sort of wedge, right? And then in theory, we're supposed to break to the upside, or are we supposed to break to the downside? Let me know in the comments down below. I'm really not sure. I'm not familiar with chart patterns. But to me, that looks like what we are seeing. We even respected the trend line this past week there on the daily chart. So I'm expecting price to go up based off of that weekly upward trend. Now on the 4-hour chart, I mean, we had a downward trend line. This was looking really good for shorts, and then all of a sudden we really got bullish pressure on gold, and then we broke above the trend line. But this is not really bullish price action. It's bullish, but there's not really like a great trend here that we could be saying, oh, we could be trading that trend on a 50-minute chart. We don't have that right now. So what I'll be waiting for, or sorry, I'm not really a day trader, but what I would be waiting for, again. Remember, our bias on gold is to prefer longs based off of the trends. So the best case scenario will be a push up to this supply, removing this supply. Now, if this supply gets removed, that'll be significant because it's a proven area of supply, meaning there was a trade off of that supply zone. It was proven to us that there was supply because we got a reaction off of it. So if we do remove that supply, any demand zone there is going to be definitely a decent dip buying opportunity, in my opinion. That's like the best case scenario. The second thing we could be doing is basically if we break this low here and we have a 1-hour downward trend, then you could be looking for shorts on a 5-minute time frame. Those are really the only 2 options on gold, in my opinion. Again, our bias is to the long side. Doesn't mean we can't get shorts in. It just means we got to wait for a trend to get in short. Already on the forecast for the USDJPY, we have clear liquidity down here on the weekly chart. I still think we could target that. Maybe we could get a push up first, but ultimately I think we might be targeting that. It all depends on what happens on the DXY. Even on the daily chart here, we have a beautiful liquidity trap set up at this daily supply above. So the best case scenario is a reaction off this supply again to prove, a third reaction off of this resistance area and get a nice pullback up to that daily supply. Really like that supply zone. It's just we're not getting there yet. Hopefully we can. On the 4-hour chart, we did remove this downward trend, so that's a bullish sign. However, we didn't really create any demand zone down here. Nothing that I would rather call a demand zone. If this area was below the trend line, then we could say this demand zone removed the trend line. But that wasn't really the case. We kind of just broke the trend line. It's a bullish sign, but not super bullish. The best bullish thing we could see is an upward trend line on the 4-hour chart. That would really signal strength. However, with the break of this 4-hour downward trend line and the fact that we have a beautiful upward trend line on the 1 hour chart, I think all signs are pointing to the upside, and it correlates with the DXY analysis that we talked about at the start of the forecast video. And if you guys are enjoying this video, make sure to hit that like button and subscribe. All ad revenue is donated from these videos to my local hospice. Just did another donation last week, so just want to thank everybody for continuing to watch these videos, liking and subscribing to my channel. So on the 1 hour chart here, beautiful 1 hour trend to the upside. It is longs all the way on a 5-minute chart as long as this trend line's holding. Let's say we break the trend line. We need to hold off on longs at that point, because then what we want to see is a pullback down to this demand zone. It's kind of a liquidity trap down here. Not really anymore. I mean, it was here. If we would have got a pullback here, it would have been. So if we get a pullback down this demand zone, I like the demand zone. It's a beautiful rally area of demand that removed a trend line. So I think it's a good demand zone. The best case scenario would be a pullback down to this support rather, multiple reactions off of it, then a pullback down to the real demand down below, and then I think we could skyrocket. So that is our demand zone at 143.15. Really hoping for a pullback down to that demand. I am not saying we are going to get there. We need to watch this trend line and see what takes place if we break it. But again, I want to see a reaction off the support. Doesn't mean I'm not going to take the trade if it doesn't, but that's kind of the best situation. So that is my analysis on the USDJPY, guys. As always, any questions, don't hesitate to leave a comment down below. I respond to every single comment. Alrighty, on to the forecast for the GBPUSD. So this supply was just removed. Now, some of the DIME members know, now we need to find the demand zone that removed the supply. Very, very simple. It is this zone, in my opinion. Some people might want to say up here, I just don't want to call that a zone. It's very, very low quality. One thing I'm starting to do more in 2020 to 25 is draw the most quality zones that I can, kind of changing it up a little bit. But anyways, at 1.33, we have a beautiful weekly area demand. I think it's a great dip buying opportunity. If, again, we see the dollar start to get strong, we could easily pull back down to the weekly demand and get a dip buying opportunity on the pound. So really like that we have a weekly zone, and what that acts as is kind of a backstop, right? If you could take a couple losses on a 4-hour chart, you could go through like a 5% drawdown, and then one big trade at a weekly demand zone where you let 25% of your profit run can make up for all of those losses, really. So I really welcome a pullback down to that demand zone on the weekly chart. Before that weekly demand, we do actually have a daily area of demand. Let me show you guys right now. So before that weekly demand, we have this daily demand zone down at 1.345. It's not bad. I think since the weekly demand zone's sitting just below it, I think it's more likely we head down to this weekly demand and we break this daily demand. So if we are going to trade at this zone, it's got to be a quick one, right? You got to be looking for confirmation, and you got to be looking to get out of it quick, or just be aggressive with your profit taking or stop loss management. So as long as this trend line's holding, it's going to be bullish as well. But again, even if we break this trend line in the zone, we have that weekly demand sitting just below, so it's most likely just going to be a fake out. So that is my higher time frame analysis on the pound. And there's really not much to go off of on the 4-hour chart. However, on the 1-hour chart, we have a pretty interesting price action taking place. If you look, we have a clear area of resistance right here forming, and we have a great supply zone sitting just above at 1.369. There's no fresh demand zone down below. This demand is already tested. It's not a great area. Look, it's barely tested, so if you really are super bullish and you want to get in long, you could wait for the zone to be hit and look for confirmation on a 5-minute chart. I personally don't trade at tested zones ever. So as far as the pound goes now, if you are bearish, you're in luck. We have 3 supply zones here. The best one, in my opinion, is this one right here. Not only because of the liquidity trap, because of the move away. It is fantastic. So I think we could see a move off of this supply zone like that. If not, we could see a move off the one above at 1.37. If not, we have the one all the way above here at 1.377 as well. So 3 pretty good zones. The nearest one obviously is this one, and that has the best move away with the liquidity trap. So it is a key zone in my opinion. If we break out, let's say we get a nice move, we break both zones, and we have a demand zone here, this is going to represent a better buying opportunity than this one, because this zone will be fresh and this one is not, if it's fresh. So that would represent the best buying opportunity, a clear breakout, breaking both of these supply zones and creating that demand zone. But for now, we have some supply zones we could be shorting at if you're bearish on the GBPUSD. I think they could work out. And then if you're bullish, that's fine. We got to wait for these to be removed, creating demand zones down below, hopefully for some new zones. All right, on to the forecast for the USDCAD. This is where I am from. This is where I'm currently living. Let me know where you guys are from and where you are living in the comments down below. So I've been pointing out this weekly demand for many months now, and we finally got to pull back down to it. And we did get a move off of it, and we did actually catch a beautiful trade. Let me show you what took place. So when we are trading at a weekly area of demand, we want to look for confirmation on an H4 time frame. The H4 time frame is the entry time frame to the weekly chart. So when we got a pullback down to that weekly demand and we broke this trend line, we had a 4-hour area of demand there. This demand zone was removed this past week. However, we did get a decent trade off this demand zone. I didn't get it off this 4-hour zone. I actually got it on the 1-hour zone. I will show you guys in a second here the trade. So if you look, there was a 1-hour zone back here. This 1-hour zone was very good. You can see downward trend line was removed by this zone. Look at this move away. This is what we teach here. Beautiful move away. Initial move away was fantastic as well. Basing is amazing. Original zone, rally base rally, amazing zone. This zone was inside of the overall 4-hour zone like that. So I simply took this 1-hour zone. It was basically a way better trade in my opinion, because it was a narrower entry. It was a tighter entry than that overall 4-hour zone. And basically we bought the pullback, almost no drawdown, and take profit was hit almost, I mean, not immediately, but like it didn't struggle to get there, obviously. So beautiful setup off that zone. Not only that, we had kind of a liquidity trap here as well. And liquidity trap is something that we discuss in the supply and demand zone full course PDF. As you can see in the screen right now, this is a liquidity trap. Very important in your supply and demand trading. It's something I've been adding the last year or so, and it's just definitely changed my results. If you want access to that PDF, it comes with the Diamond membership. So as far as the 1-hour chart goes now in the USDCAD, we do have 2 fresh zones on the 1-hour time frame. If you are bearish, if you think we're going to continue to go down, that is our supply zone sell setup at 1.36. If you are bullish, we want to be waiting for a pullback down to that area of demand at 1.357. It's a good zone. It removed a downward trend line. And so it's pretty good. And really, those are our 2 trading opportunities on the USDCAD for now. And what I like about that 1-hour supply is it's actually inside of this overall 4-hour area supply. So it kind of makes it higher odds. But remember, that weekly demand is in control on the US dollar. So we got to be mindful. If we do get a breakout of this chart on the 4-hour chart here, if we get that breakout, breaking supply, breaking the downward trend line, we have to ask ourselves, is this a significant breakout or not? And then we say, oh, actually it is, because the weekly demand is in control. So if a demand zone is formed that removes both the trend line and this supply zone, that's going to represent a great buying opportunity on the USDCAD. So I'm very interested in seeing, what takes place this coming week in the USDCAD. Alrighty, on to the forecast for the Aussie US dollar on the weekly time frame. Clearly momentum is up. This is not a trend. A lot of people get confused. They just see this and they're like, oh, the trend's up. Not really. For a trend, we're looking for, clear lower or higher highs and higher lows and stuff. We just don't have that here, but what we do have is some pretty strong momentum to the upside on the weekly time frame. On the daily chart, I don't mind, I kind of like that we dipped below here and then broke the high. That's definitely a bullish sign to me. However, I just don't really want to draw a trend line there yet. I mean, in theory, we could. It is so close. I don't know. It's tricky. At this time, I'm going to draw it, but it's really not my favorite trend. So it is kind of tricky. There hasn't been a lot going on the Aussie US dollar, I will admit. The last couple weeks. However, we do have a new 4-hour demand zone down below. It's not bad. The issue with the zone, it's kind of just an obvious pivot low. So a lot of the times we will see these zones kind of stop out when they're a super obvious zone, kind of fake out and then get that move up. So just be mindful of that. It might be best to have a wider stop or even enter like midway through the zone and have a wider stop and just maybe because of a fake out. So keep that in mind with these obvious pivot low zones, guys. Trend to the upside though. So in theory, day trading longs are actually fine if you were bullish on the Aussie. However, on the 1-hour chart, something significant took place. We had an upward trend line here. This trend line was pretty decent in my opinion. And this trend line was removed by this area of supply at 0.657. So if you're bearish, this is really the only setup I'm seeing. It's a decent rally base drop. The move away is really good, the initial move away. I don't love that we hesitated around there, but in my opinion, it's good enough. The trend line was removed. If you're bearish, that is our supply zone short. And if you're bullish, again, we have that pullback zone I was talking about on the 4-hour chart, or we want to wait for the supply to be removed, and any demand zone there could represent a good dip buying opportunity. But for that, the best case scenario would be not only breaking the supply, but breaking above all these highs as well. That would be a very, very bullish demand zone there, in my opinion. So that's kind of the dream setup. But for now, that's really the only zone I'm seeing on the Aussie. For shorts, and like I said, we got to wait for that to be removed for longs, or wait for a pullback down to the demand zone at 0.64. Alrighty, on to the forecast for the USD Swiss. This is very, very correlated to the dollar. We have that weekly demand zone in control, just like we have on the DXY, and now we are getting a reaction. So in my opinion, this is obviously going to do whatever the dollar does, and we are expecting to see some strength. And on the 1-hour chart, we actually have a beautiful 1-hour trend. Very, very similar to the DXY. This is very, very correlated. It's very nice to see. So as long as this trend line's holding, 5-minute time frame longs are going to be good. Unfortunately, this trade has already been worked out twice. Now, this is not a setup I would have taken, that second touch, that's for sure. But beautiful move off that zone initially, and then obviously we ended up going all the way up there. So that was a great trade. That zone's tested, not at twice, definitely not one I'd be trading at. So for now, it is longs all the way, as long as this trend line's holding on a 5-minute chart. On the 4-hour chart, we actually got a quick little trade off this 4-hour supply zone. Why quick? Because the weekly demand's in control, so it is better to be taking profit earlier. This is called trade management. Trade management is not just about putting your stop loss in and risking 1%. That is not true. It's about knowing when to put your stop loss to break even and stuff like that in different scenarios. So this was a scenario where it's better to be aggressive with profit taking, and that's why we were. So beautiful 4-hour area of supply here on the USD Swiss, called out in the daily market breakdown video. So that trade's worked out. Trends to the downside, you in theory could still be day trading short, but again, you got to be aggressive with your profit taking, aggressive with your stop loss management. I cannot stress that enough. We do have a couple good supply zones above. This one's not amazing, but it's decent at 0.83. The better one is sitting all the way up here at 0.811. The only issue is that I would have liked to pull back here rather than a pullback over here. Why? Because over here, that pullback, the weekly demand that's in control now, was not in control. So now the market dynamics in the higher time frame have changed. So all of these supply zones now become lower odds. So these supply zones might only be good for small moves like this. So, and that's fine. There's still money to be made. Again, we prefer to look for longs based off of the weekly demand in control. So what I would be watching this week as well, I would have all these zones on your charts. I would copy them on your charts. If they get removed, any demand zone is going to represent a good dip buying opportunity, confirmation trade as we come off of the weekly area of demand. So hopefully all this makes sense. Again, any questions at all, don't hesitate to leave a comment. I will answer the questions because I know it can be confusing. So to recap, these supply zones can be used for short, quick, little 1-to-1, 2-to-1 trades, maybe 3-to-1. Be aggressive with your profit taking and stop loss management. And then since the weekly demand's in control, we want to wait for these zones to be removed. And if any demand zones are created, that's going to be good dip buying long opportunities on the USD Swiss. Alrighty, last but not least, we are on to crude oil. I'm going to start with a daily chart, then I'm going to go up to a weekly chart, and here is why. We have a daily demand in control, and if you look, this daily demand is created right at this trend line. I don't think it's a coincidence. I'm not going to get into detail why, but you know, supply and demand is key to trading in my opinion, guys. So daily demand is in control, and I actually think it's going to break. Why do I think it's going to break? Well, because we have a very, very good weekly demand sitting just below. So we definitely could see a pullback down to that weekly demand before we get that big move. Yes, we are seeing some bullish price action right now as we react off that daily demand, but in my opinion, the better demand is on the higher time frame sitting just below. So that is definitely something to consider. We are getting some sort of momentum to the upside. I would agree. There is a very good supply zone up above at 73.50. Not only is it very good, it is very large. So it might be best to simply enter halfway at the zone or whatever you want to do, confirmation there on a day trading time frame. That's fine. I still think it's good for a short trade. But remember, guys, if we contact this weekly demand zone first and then we hit the short trade up here, it's lower odds. We got to be aggressive with profit taking at this point. But what we could be seeing, since the daily demand is in control, we could see more bullish price action up to the supply, a reaction off the supply, and then the pullback down to that weekly area of demand, guys. That is just one thing that is possible. that we could be seeing. Now over here, from quite a while back, we had a downward trend line. That downward trend line was removed by that demand zone, a very good drop-based rally. Gap zone, I like it. So in my opinion, this is really the only dip buying opportunity. It is pretty much it's a risky set and forget because it's been so long, but it is inside a higher time frame zone, so that's what makes it a little bit higher odds. So definitely could be a decent pullback entry at 61.07, or like I said, with that daily demand and control, we could actually be getting that pullback up to that 4-hour supply before we get that breakdown to the weekly area of demand. But for now, guys, we really just want to watch those 2 4-hour zones on oil, and we want to watch the 1-hour trend to really decide where price is going. And right now we don't really have a trend, so it's very difficult to tell where price is actually headed. So for now, we got to watch the 1-hour trend and the 4-hour areas of demand and supply. If you want to watch the full-length forecast and get my daily chart analysis and daily market breakdown videos, join the Diamond membership. Links are in the description down below.